I'm looking at the Sing dollar. It's been fluctuating throughout the morning since that decision was made. Currently flat at 142.70, which is say that the path of least resistance for the SGD is to the downside.
I think there is still the upside bias in dollar versus Sing dollar. We do think that the general broad dollar weakness is not likely to sustain. But at the same time, I think, a domestic situation for the current Sing dollar outlook, it still points towards further weakness in the Sing dollar as well. So both the external and the domestic factors are still pointing to a weaker bias for the Sing dollar.
Christy, let's look broader now. How are you differentiating within Asia FX? Do I focus on oil currencies? Do I focus on currencies that have countries at current deficits? I'm just wondering how you actually see things now within that space.
Well, it's an interesting question. This tsunami wave that's hitting Asia from the COVID-19 is basically still playing out in a very differentiated way. So I would say that in the next few months, we are just ending the first quarter. So from the second quarter onwards, we may see some differentiations. Given that the policy responses from the Asian governments have been to, arrest the downside risks as well as provide some kind of a growth support to pave the way for a synchronized recovery in the second half of this year. However, I think we're looking at the different entry points from the Asian economies into the COVID-19 situation. So we'd say that some of the countries that have taken more aggressive policy responses and some of the countries that have actually more policy rooms, they will be able to provide a greater buffer. And we're talking about, like, for instance, Singapore and Korea, and they have provided a lot more, I think, policy responses than, say, some of the later entrants to this COVID crisis. So with respect to which factors we want to look at, we want to look at policy rooms, we want to look at policy responses, as well as the entry points of these economies. And on that front, I think that in the second half of this year, even if we see a kind of synchronized recovery in Asia, we're going to see that it is not going to be a very sharp recovery point. It is probably going to be, a drag-out, U-shaped kind of recovery.
And you mentioned when it comes to the renminbi that perhaps the rest of Asia could stay fragile, but the renminbi is going to stay, relatively speaking, stable. Why so?
Yes. So the RMB, I think China being the first into the COVID-19 crisis and has shown signs of recovery and also resumption of manufacturing activities towards normalcy. We probably will see this, panning out further. And given that the China has a greater policy room, be it monetary or fiscal, and it has been targeted. It hasn't really thrown in some kind of a bazooka policy responses. So these targeted responses are playing out as we speak. And at the same time, given the external attrition in demand, we're looking at China actually having the domestic demand capacity to absorb the reduction in external demands for its products. So in terms of recovery, in terms of the room to actually absorb domestic, the manufacturing activities resumption by the domestic demand, China appears to have the biggest, the biggest room and biggest opportunities there. So in that regard, I do expect that China's policy stability will play out pretty well. And the other thing is that with regards to the currency, we've seen as well in 2015, and during periods of a financial crisis, whereby when the currency is looking vulnerable, the policy priority is actually to stabilize the currency. And we've seen this as well. So, if you look at the RMB's performance respect to its trading partners, it's actually been doing quite well. So the policy stability there is very important as a policy anchor for the rest of the region as well.
Christy, before we let you go, are the rupee and the rupiah raising red flags?
Well, the concerns with regards to the Indonesian rupiah is that it's currently one of the major risks of being the hotspot in Asia after China. So with regards to COVID-19 and the lack of, I think, testing and as well as transparency in the overall situation is keeping investors rather nervous, and reasonably so. So I do expect that, there is the general understanding that BI will come in to support the currency in times of volatility, and it has stepped in. It has loosened monetary policy as well. But I think investor confidence has to be restored, and a lot of it will depend on their policy response towards COVID-19. As for India, I think the current lockdown situation is not helping sentiment either. So in this overall situation, when actually carry trade and yield plays are now taking a back seat, these two currencies will probably be quite vulnerable.